Now we'll go to the ANAROCK expert to talk more about what is triggering this kind of a rebound in rental yields. Shobit is joining us. Shobit, talk to us. What is your reading? You understand this space. You've been Prashant Thakur, is joining us now. Prashant, what are your thoughts? What is the triggers and the factors behind this sharp recovery in rental yields?
See, I think as Snehi put out the statistics, you could, it was quite evident that while the rentals have had strong double-digit growth, though the property prices have increased, but the rental growth has really surpassed the increase in the property prices. That is one of the factors. But if we have to really understand what has led to this surge in the rental, we need to step back before COVID. So during COVID, what happened? Most of the landlords had slashed down the rentals to kind of most of the flats were lying vacant because people went back to the hometown, and it led to a sharp decline in the rentals. Post COVID, when all of a sudden the entire world opened up, the schools, the offices, and people were rushing back, that was the time when the landlords, with an objective of recouping the loss that they had incurred during pandemic, they escalated the rentals quite steeply. And then that was the base at which the further rental escalation happens. Most of the rental agreements every year 10% escalation happens. So post COVID, we saw a massive double-digit jump in terms of the asking rent from the landlords, which the tenants had no option but to take at whatever rate it was possible. And that's the reason we have seen a huge spike. The third reason is that most of the property that were ready to move in are completely sold now. And then, if you look at the strong launch pipeline, most of the properties are still under construction. But again, having said that, I strongly believe that the kind of supply that has been observed in the market, once these units get completed, for example, this year we are expecting close to 5.5 lakhs of units being completed and delivered. And when these ready to move in properties hit the market, I think there will be certain kind of, I would say, stabilization in the rental market. But at this point of time, what we are seeing is the property prices are also increasing. The rentals are kind of increasing at a faster rate than the property prices. And one thing to note is that it's not happening across all the micro markets. So while the micro markets which are very near to the IT park, SEZ, and in good locality, we are seeing a steep increase in the rentals. And thus, it is kind of not fairly distributed. And if you look at the areas which are still underdeveloped, where socio-economic factors are still not up to the mark, there the rentals have not grown at that speed. But yes, at this point of, I think all the indicators in real estate are looking positive. Be it the sales momentum, be it the price increase, be it the increase in rental. So I think these are the factors which are kind of fueling the growth in rental demand.
Quickly, before we let you go, I want to understand what's the outlook from here on. Many of the investors want to, they always, especially big HNI investors, want to take out the profits from the stock market, which they have made over the years, and park it in real estate in hopes of good rental yields and capture the gains into a hard asset. Do you think the outlook is slightly on the higher side only? The rental yield will continue to sustain with a positive bias, or they may come down sharply?
No, I think they will continue to grow, but again, the growth will be limited to on the luxury side of the project, where the supply is very specific, constrained localities which are very near to the IT parks, and then good societies will always command a premium. But again, having said that, as I mentioned earlier, that the kind of supply that is expected to continue hitting the market, that will always keep a cap on both the price as well as the rentals. So, and then if you look at the current market, I think 80% of the sales that is happening is driven by end user and 20% is investor. I think that mix is going to continue for many years to come. And also, I would like to add, as and when infrastructure opens up new land parcels, the supply also increases. And then, the basic fundamental of demand and supply comes into place. And then that keeps a cap on both the price as well as the rent.
Right. Thanks very much for joining us, Prashant, with those inputs.
If you like this video, then like, share and subscribe to ET Now.